In this video, new research on Tesla's $40 trillion opportunity. Yes, that was trillion with a T. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store, so check out the links in the pinned comment below, and thanks for your support. There's rarely a dull moment with Tesla stock today, up over 3.5%, more than $35 per share, steadily climbing and flat after hours. Just to put things in context, again, never a dull moment with Tesla. In the last 5 days, Tesla down almost 3%. Over the last 1 month, up over 33%. Year to date, down 15%. Over the 1 year, up almost 40%. Over the 5 years, up over 1,500%. And yes, why not? Since IPO, up about 26,500%. And while many investors prefer to attempt to time the market, I personally see Tesla stock as massively undervalued. Again, I'm a long-term investor. I'm not trading in and out. I haven't sold a single share of Tesla stock. I just buy when I got money. I don't know, maybe I just like things to be simple. So far it's worked out okay. Now let's check out the latest research note from Morgan Stanley on Tesla's $40 trillion opportunity, which is of course simply deploying an army of bots on Twitter to pump up the stock price to $40 trillion per yesterday's video. Not. When I first saw this research note, I got really excited. I thought, have Morgan Stanley been watching the channel? Are they too going to start making inappropriate comments about people's mothers? But I misread the headline. Quote, 5 thoughts on the mother of all CapEx cycles. Before we read through, again, I just cannot let this go. I don't understand what's going on here every time. This is not going to age well for Morgan Stanley. I just have to point this out once again. If I'm misinterpreting this, please let me know in the comments below. I'm probably an idiot. I can't possibly believe that Morgan Stanley actually believed these estimates. So I assume I'm just an idiot and don't understand. Must be going above my head. I'm not that smart, so I totally get that. If I'm interpreting this correctly, and I clearly can't be because it's just nonsensical, I'm obviously just a moron, but based on my moronic interpretation of what's in this research from Morgan Stanley, their estimates for EPS just don't make sense. They don't add up and I just don't get it. This little E here, Morgan Stanley research estimates, is included on all of their financial year estimates, okay? So my interpretation here is that Morgan Stanley are estimating in 2022 for the full year, Tesla does EPS of $7.63, $10.90 in EPS in 2023, and just $15.20 in 24. Please can somebody explain why I'm a moron and what I'm not understanding here? This doesn't make sense. They're not that dumb. I must be really dumb. And while I'm at it, I'd also like to obnoxiously claim that it won't be too long before Morgan Stanley massively increases their $1,300 price target on Tesla stock. Give it 6 months max. Could be wrong, but I doubt I will be. Quote, we believe the next 12 months will show investors how Tesla and the broader auto industry my life, yeah. This is assuming that the broader auto industry doesn't go bankrupt, so let's just play along at home here. But in my opinion, as I tweeted today, they're all fucked. I mean, 95% of legacy automotive manufacturers won't exist at the end of the decade. They'll either have been acquired, merged with some other companies into some conglomerate, or more likely have just gone bankrupt because they're incompetent, it's too late, sales are collapsing, they're late to the party, they're late to wake up, they're late to transition to EVs, they still think they're going to be selling these things years after consumers will have to be brain dead to be buying them. It doesn't end well. So I just want to put that caveat out there. The opportunity that Morgan Stanley is saying is on offer for the automotive industry is on offer to the automotive industry, assuming that they can stay in business to take their share of said opportunity. Of course, if they don't, Tesla's definitely going to be there to fill in the gaps. So Morgan Stanley believes the next 12 months will show investors how Tesla and the broader auto industry, assuming they don't go bankrupt, are vital to the transition off the fossil fuel economy, aka the molecular energy economy, into the renewable economy. Largely following Tesla's lead, accurate, we look for many other auto companies to play a critical role in re-architecting the renewable energy / transport industry. Sorry to rain on your parade here, Morgan Stanley. Wishful thinking. I'm sure in an ideal world they'd love to participate, but I don't think they're going to have a meaningful contribution. Maybe a few exceptions, but the majority, sorry, not going to be in business end of the decade, so I don't think they're going to be helping out a whole lot. We estimate as much as $20 to $40 trillion must be spent over the next 20 years in accumulated capex and R&D to transition off fossil fuels, and that 1% of this amount has been spent, while less than 3% has even been allocated. That is a lot of money. While many investors are still focused on whether GM can outperform Ford by 5 or 10% this year, they're not investors, they're idiots. Facts are facts. I know I'm obnoxious, I know I'm arrogant, I know I'm abrasive, but I'm also being honest. The global renewable energy / battery capex cycle is where the real alpha is, in our opinion. 1. Tesla is overvalued. Tesla is undervalued. At the same time, in our opinion, Tesla is overvalued as a pure car company, solving for just unit times price of cars. Yeah, fair point. However, The company may be substantially undervalued, okay? I just want to underscore this. The company may be substantially undervalued as a renewable energy onshore infrastructure company. We see Tesla as the ultimate battery capex play. I agree with Morgan Stanley here. If you're looking at Tesla through the lens of an automotive manufacturer, that's all they do. They just make cars just like every other automotive manufacturer. Then sure, you're going to come up with some insane valuation metrics and go, oh, this doesn't make sense. Tesla's overvalued. As the Tesla Q bellends have been saying for the last, I don't know, decade straight. But if Morgan Stanley are right and Tesla is a little bit more than an automotive company, which I believe they are, I also believe that they are substantially undervalued. Hence my Tesla stock price targets. For those who don't know, you can access these exclusively on Patreon, card in corner or link in the description. Even in my bear case scenario, I have Tesla stock doing a 10x or more over the next decade. Of course, I could be wrong. In fact, I will be wrong. I don't know what Tesla's going to be worth at any point in the future, but I do believe today that it is substantially undervalued. Morgan Stanley are right. I do also want to underscore the final sentence in the first point here. We see Tesla as the ultimate battery capex play. Again, go back to the earlier point. Up to $40 trillion needs to be spent on this stuff. A huge portion of that on batteries. Who makes batteries? Who's producing batteries at scale? Who has home batteries? Grid scale batteries? Batteries for electric vehicles? Who's designed a new battery cell? Yeah, I don't know either. 2. War plus inflation equals energy innovation. We believe events over the past 2 months and catalysts over the next 6 months can materially shift the narrative around what Tesla does, the markets they address, the growth profile, and the global and strategic implications of the ecosystem on which they sit atop. In other words, Morgan Stanley believes over the next 6 months, people may finally start to understand what the actual Tesla is. By the way, I don't want to rain on anyone's parade here, but we're not talking about actually understanding what Tesla is. We're talking about understanding what Tesla obviously was a few years ago and where they were heading. This was before the obvious AI leadership path to AGI, Tesla bot, expanding the global labor market, all the stuff that everyone's completely ignoring and doesn't even talk about yet. Yeah, it's going to be years before people figure that out. But it's good to see that Morgan Stanley are confident that the market is finally going to start to figure out what others knew years ago to start. 3. Investors are starting to appreciate the advantage Tesla has in going direct to consumer. Again, I just want to underscore, investors are starting to appreciate the advantages that have been extremely obvious to people who actually did some homework for years. I know I'm kind of being a brick here, but I don't know what else to say. Well, legacy OEMs are prohibited from doing so by powerful state dealer franchise laws. This Tesla loophole, which the new EV startups can also take advantage of, is creating 2 classes of auto companies. Those that are going bankrupt and those that may not. Data from March US auto sales continues to show the 2 seasonally adjusted annual rates at work, with EV and direct-to-consumer sales up over 100%, while legacy and franchise seasonally adjusted annual rates fell by more than 25%. In other words, ICE sales currently collapsing, EV sales going to the moon. Who could possibly have seen this coming? I wonder if this trend will continue. We admire Ford CEO Jim Farley's attempts to help bring forth evolution to the franchise system. By the way, I totally agree with this. Got some balls, and I appreciate balls. Who else appreciates balls? Let me know in the comments below. One price, no haggle, agency and hybrid model, and are watching this situation closely. In other words, Jim Farley has now publicly said, you know what, this whole dealer thing, yeah, this is kind of a bit of a problem. We need to rejig things here. Dealerships obviously are not going to be happy, but at least Farley's doing his best to try to help Ford avoid imminent bankruptcy. 4. The bigger forces driving the multi-decade trillion-dollar battery capex cycle. As globalization evolves into a new era featuring heightened concerns around national security, investors must contemplate the new energy supply chain and supporting infrastructure. Great point. While batteries and storage seem an important part of the solution, the supply chain to mine and refine and deliver the necessary metals from the Earth's crust to the hundreds of battery factories, I'm assuming, that need to be built may arguably be less secure than the fossil fuel ecosystem. According to China Chemicals and battery analyst Jack Liu, China supplies 50% of global battery shipment and 50 to 75% of global battery materials, including the cathode, anode, separator, and electrolyte. In other words, at this point in time, China has the world firmly by the balls. Nothing could go wrong there. China imports mined lithium and does refining of lithium to lithium carbonate or lithium hydroxide. Morgan Stanley go on to say they've identified 13 names across Europe and the Americas that may be well positioned for the mother of all capex cycles, and I can just identify one. Starts with T, ends with A. My second favorite thing that starts with T and ends in A. 5. Yeah, but can you make batteries? When I meet new people in the course of doing business or even on the street, I feel an urge to ask them, yeah, but can you make batteries? We need batteries, and at very high scale. Where do we need them? Everywhere energy is generated. Oh, is that all? Everywhere energy is consumed, and everywhere things move. So I think what Morgan Stanley is saying here is that we need batteries literally everywhere. And I agree. How much battery capacity is needed? A shitload. No, a fuckload. This is a topic that deserves further analysis, but we estimate the order of magnitude of battery capacity required to move 100% of the global light vehicle fleet to electric, plus grid level and distributed stationary storage, may be in the 20 to 40 terawatt hour range. For perspective, we have kilowatts, megawatts, gigawatts, and then terawatts. This is a gigantic number. Depending on a host of policies, technologies, and other factors, at a capacity cost of around $80 million per gigawatt hour of capacity, the capex required for battery manufacturing alone could be in the $1.5 to $3 trillion range. That's just the battery factories. Add in the upstream mining and refining, downstream grid upgrades, renewable energy supply, charging infrastructure, and related automobile manufacturing plants, recycling, service, and support, and we're talking figures potentially on the order of $10 to $20 trillion or more over a 20-year period. I love the sass in this last line. If you can think of a capex cycle bigger than this one, you know where to find us. Morgan Stanley made a lot of great points in this research note. The too long didn't watch is pretty simple. An obscene amount of money must be spent not only on building factories to produce batteries and so on, but on buying batteries themselves. We're talking $20 to $40 trillion of spending over the next 2 decades. If Morgan Stanley are right, staggering financial rewards will accrue to companies who can produce batteries, who can produce vehicles that also contain batteries, and also who produce other technologies related to a renewable energy economy such as solar. Unfortunately, I don't know of any such companies, so I just keep buying Tesla stock because I'm an idiot. What are you doing? Let me know in the comments below. Who do you think will be the biggest winners in terms of companies over the next 20 years? And finally, don't forget to sign up to Patreon with the card in the corner or the link in the pinned comment to gain instant access to my Tesla price targets all the way out to the end of the decade. As I said, I too believe Tesla is significantly undervalued. Could be wrong, doubt I will be. You'll also gain access to well over 100 exclusive Q&A videos on every topic you can imagine, plus loads of other exclusive content and perks. So, I'll see you over there. And if you made it this far, thanks for watching, ladies and gentlemen. On a personal note, hopefully you haven't noticed, but I'm just going to be real here. I feel like absolute horse shit. I'm so dead the last few days. I'm sick, under the weather. Not a sob story here, but I just wanted to point out that behind the scenes, it's been hard fucking work. But unless I'm dead or almost dead in hospital, I'm not going to miss a daily video. So, see you tomorrow. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.